Welcome in to another daily editorial here on the KE Report. I'm chatting with my good friend Jordan Roy-Byrne, founder and editor of the dailygold.com. And Jordan, let's recap the monthly charts for gold and gold stocks, considering we just turned the corner into October. As we started off September, I think you could say that optimism was pretty high in the precious metals space. We had broken above 1,300, and, well, the metals were moving up, looking to take out that high in 2016. But as we started September, it just went down, down, down. It wasn't a waterfall decline, as we're currently trading right around 1270, but still, we gave back up that $1,300 level pretty easily, one could say. And you can just say that this market, especially in terms of the stocks, and I know I've touched on this a number of times, and I hate bringing it up, but it's pretty boring right now. What are your comments on the monthly close that we just experienced?
Yeah, thanks for having me on, Corey. Yeah, the word boring, that actually sums things up pretty well. I mean, we had a bearish reversal for the month. I mean, we were talking about this several weeks ago. I think early in September, the middle of the month, in the key levels for gold. And on the quarterly chart, you have 1330, which is also very significant on the monthly chart. And so gold, I believe that was very close to the open for the month for gold in September. It was around that 1330 mark. We went above that and things were looking great early in the month, but then completely reversed. And if you look at the kind of bearish candle we had, it's a little similar to what we had after the 2016 top and after the early 2014 top. But also, I would also point out we had a similar candle 2 or 3 months ago, and then gold was able to rebound after that. I don't think gold is going to immediately rebound here and retest the highs. I think that just looking at the monthly candle, not only in gold, but you see something very similar in the gold stocks. If you look at GDX and GDXJ, for example, I mean, if you look at the monthly chart, it shows for GDX, it's just been trying to get above 25, hasn't been able to do it. And, you have a clear bearish candle in September. Same thing can be said for GDXJ. And that's not to say, oh, we're about to see some collapse and huge correction. But I do think for the remainder of the year, these candles they're not favorable. I mean, any rebound we're getting a little rebound now, but I just don't foresee that much of a sustained rebound or a big rebound until these markets get more oversold or until some fundamental things come in place. And also, I mean, in the article I wrote, I did not include the US dollar, but that got really oversold and that's rebounding now. So, I mean, I guess you could say the short term or medium term trend for precious metals looks to be down. And, we're going to have to wait a while for another chance to break out of this multi-year bottoming pattern that, I mean, from looking at the charts, I mean, it's 4+, maybe even 5 years long now.
So what I find so interesting looking at this monthly longer term chart is that we absolutely put in a nice bottom at the tail end of 2015. The markets moved up. I'm looking at GDX right now, but then they came back down and we're very much trading in the middle, slightly above the middle part of that range from the bottom to the peak in 2016, which you could say is encouraging that we are that far off of the bottom from 2015. But Jordan, is this now almost a coin flip as to if the precious metals and precious metals stocks break to the upside or break to the downside?
Well, I mean, it's really hard to say. I mean, it's going to depend on other factors. And as far as I mean, looking here in the medium term, I mean, even though I'm bearish, I just don't foresee some massive breakdown coming in this sector because you look at the low that was made at the end of 2015 or early 2016, especially with respect to the mining stocks and the mining sector, and just how cheap they were. You're just not going to see those levels again. So I really don't foresee any like big break to the downside coming. I just think it's with the way things are lining up, we're going to have to be really patient. I still favor a break to the upside, but I mean, it's hard to say when that could happen. I mean, it doesn't look like there's any chance of that happening in the next quarter. So I think at best it's probably, it could be a 6 to 9 month thing. We'll see, but I don't foresee like a massive breakdown coming or this big move to the downside. You would really need a steep increase in real interest rates for that to happen. And I just don't, with the amount of debt that we have and just with the economy, it looks like it's doing a little bit better. But I just don't see it being feasible for real interest rates to get that much stronger to really pressure precious metals to have a big breakdown. I mean, sure they can decline for a quarter or two and sell off based on, real interest rates rising temporarily, but I don't see I don't see a fundamental reason for a massive breakdown in the sector. I just think, like you said at the top, I mean, boring. This could continue into next year where we could see more boring action where it just kind of stays in a big range and it kind of waffles around for a while. And in that scenario, I mean, people who trade and invest in the sector, and this is what I've been trying to do since last December, I'm looking to buy value. I'm looking to buy really oversold conditions. And I'm confident we're going to see some, with regards to those two things, we're going to see some opportunities develop around the end of the year. But people just have to be really patient. They have to pick their spots and wait for the market to get oversold and get down to strong support levels. Because if you just go into things right now, you're just doing it on the basis that you think gold is going to make a big move higher. I mean, you'll probably be right, but who knows how long you're going to have to wait for that thesis to play out. So with that being said, I mean, that's why I'm really focused on trying to buy value in oversold conditions.
Hey, I'm with you, Jordan. And one thing I think we need to consider for the precious metals, even though they're boring right now, we are off our lows, and that is when the U.S. equity markets continue to reach new all-time highs. The Fed has been raising rates this year. They're going through a tightening of their balance sheet. All of these factors you would think would push the metals consistently down, but they've been able to hang up there. So I think in a longer-term sense, those are some more positive fundamentals we can stick with. But again, it's going to take some time. Let's talk about the U.S. dollar here because we've seen a good rebound in the dollar through September. The uptrend seems to be in place. It's that turn that you and I were waiting for. The next resistance point, at least on my chart, is right around 94, which it's very close to. What are you watching for the dollar in terms of maybe a continuation of this upward trend?
Yeah, well, if you look at even on the monthly chart, the dollar got pretty oversold. And so, I mean, as you know, Corey, when you get oversold on a daily or a weekly chart, it takes days or weeks for that condition to correct itself. But if something gets oversold on a monthly chart, that's not something that's just going to reverse itself over a couple weeks. I mean, it's going to take at least a couple months. And so looking at the dollar, I mean, it has a clear bottom at 91. It has a little resistance at 94. Yesterday, it almost touched 94. If the dollar has a little pullback at 94, it could set up a reverse head and shoulders bottom pattern, and that would project to upside of around 97. And that's interesting for a couple of reasons. First, Jeff Gundlach is still bearish on the dollar, but he was calling for a counter trend rebound. He mentioned 97 as his target. Now, if you look at the 200-day, 400-day moving averages, they're coming in right around the 400-day. That's right around 97. The 200-day is closer to 98, but it's declining. So we have a confluence of factors here, all pointing to 97 as a potential strong resistance target. And in addition to that, if we're looking at the real big picture for the dollar, I've been a dollar bull for a really long time, but I think if you look at the 40-month moving average, and you just look at a 40-year chart of the dollar, the 40-month moving average has done a really good job of defining the trend, providing resistance during bear markets and providing support during bull markets. And a couple months ago, the dollar broke below the 40-month moving average, and it closed below it 3 months in a row. Now that's at 95.22. It's rising, so maybe it gets up to 96 over the next couple months. So that's also going to be resistance. So I see a confluence of major resistance around 96 or 97. And so in the next couple months, we have to watch and see, how's the dollar going to close on a monthly basis? If it gets up to 96 to 97, what happens from there? Does it turn lower? Does the gold market start to anticipate a move lower in the dollar, that this is just a rebound. It's going to go below 91, 92 again. So with the dollar, I mean, short to medium term, still bullish. There's more upside here, but things will get really interesting when it tests 96 to 97. If it gets up that high, that could be the point when it's ripe for a reversal back to the downside, and that would obviously help precious metals.
Exactly, and it'll be interesting to see how precious metals are impacted by whichever direction the dollar does move, especially if it continues back up, because we have seen an inverse correlation between the dollar and the metals recently. This isn't always the case, but to me, this is one of the driving factors as to why gold started to correct here, because the dollar didn't further break down. Do you think this inverse correlation is going to hold true for maybe at least until the end of the year into next year?
Probably. It'll be interesting to watch because the dollar has not, gold, as we know, did not benefit that much from the dollar just plunging. The dollar made a new low, gold did not make a new high. So that's something that concerns me. But with respect to the correlation, another thing to watch is how gold performs against foreign currencies. That's actually been strengthening in recent days. So I like to see that. I mean, in the really big picture, I know there's some people who are saying the dollar and gold are going to rally together. I don't see that happening right now. I mean, my guess on that would be whenever we get the next recession or whenever we get the next financial shock, that could be the point in time where those events are bullish for both gold and the dollar. But I don't see that as something happening here and now or even in the first half of 2018. I think the negative correlation for all intents and purposes will probably remain in place.
All right. Well, Jordan, some interesting comments and some good technical levels that you provided us, especially for the dollar. And again, the takeaway is that, yes, the metals markets are boring, but they're still hanging up there relatively well as we continue to see interest rates be rise in terms of the Fed, and the U.S. equity markets continue to all-time highs. So something to consider when we're looking at a relatively boring market. Jordan, thanks for your time today.